All right, let's get right into it. There's something huge happening in the global economy right now. It's a massive collision. On one side, you've got these incredible digital dreams, and on the other, the hard physical limits of our world. And right at the center of this clash, the AI revolution.
And just to give you a sense of the scale we're talking about, look at this number. $500 billion. That's what NVIDIA alone expects to see in revenue from its next-gen AI platforms by 2026. I mean, that's just an almost unbelievable figure.
So, where's all that money coming from? A huge chunk is from the cloud. The biggest providers are planning to spend a mind-blowing $600 billion on capital expenditures in 2026. In 1 year. All just to build out the physical hardware needed to run this new world.
And let's be clear, this isn't some far-off prediction. Nope, it's happening right now, as we speak. We are smack dab in the middle of a modern-day technological gold rush, a fundamental build-out that's changing everything in real time. So yeah, let's start there. Let's look at the sheer size of this investment boom, this AI gold rush.
I mean, the numbers really do tell the story here. You've got NVIDIA with that $500 billion pipeline, the cloud guys on a $600 billion spending spree. You see Meta just keeps raising its bets. And then you hear from giants like Amazon and Alibaba, and they're saying they literally can't build this stuff fast enough. The AI capacity gets used up the very second it comes online. The demand is just insatiable. But, and this is a huge but, just as this digital rocket ship seems to be taking off, it slams right into a very real, very physical wall. An executive at Alibaba just lays it out there, saying the actual supply chain, the factories making the chips, the memory they need, it's so stretched that it could take 2 or 3 years just to sort out the bottlenecks. And that, right there, brings us to the core conflict of this whole story, the unavoidable collision with what we're calling reality's bottlenecks. So this is the fundamental tension, right? On one side, you have this digital ambition for basically infinite computing power. And on the other, you have the messy physical reality of supply chains that are breaking at the seams and energy grids that are totally strained. It's that classic unstoppable force meeting an immovable object.
So these constraints really boil down to 2 big choke points. First, that supply chain squeeze. We're talking a multi-year waiting list for critical parts. And second, the massive, and I mean massive, energy drain. These new data centers are just incredibly power hungry, putting a kind of stress on our power systems that we've never really seen before.
But check this out. Because of that energy drain, something really interesting is starting to happen. The big energy companies are having this light bulb moment. They're realizing they're not just selling power anymore, they are becoming the literal foundation that this entire new AI economy is being built on.
And you can see it happening. Giants like ExxonMobil are talking about more than $3 billion in new earnings from projects that are basically just powering this growth. Chevron is spinning up these huge gigawatt-scale projects specifically to feed the hunger of data centers in the US. Think about that. They're not just selling barrels of oil anymore. They're selling the fuel for the digital revolution.
But, physical limits are only half the problem. There's this whole other layer of chaos being thrown into the mix, the new rules of trade. Across the board, businesses are wrestling with what everyone's calling a new uncertainty. You've got shifting trade policies, surprise tariffs, geopolitical drama. It's forcing basically every major company to completely tear up their old plans for how and where they make their products. The old global playbook? Yeah, that's gone. You can see companies scrambling to adapt. GE Aerospace is trying to navigate a $500 million hit from tariffs. Tesla is pulling its supply chain way closer to home, trying to build everything on a continental scale. And Apple? Well, they're desperately trying to build redundancy, after learning the hard way what happens when you have all your manufacturing eggs in one basket.
So what does all this corporate drama mean for you and me? Well, this quote from Walmart kind of says it all. When the global trade system is this chaotic, it becomes, in their words, exceedingly difficult to predict costs. And what happens then? Well, you might see bigger price tags on the shelves because companies are marking up their inventory just in case to protect themselves from all this uncertainty.
And all of this trickles right down to us, to the person on the street. It brings us to the mindset of the cautious consumer.
What's so weird is that we're seeing 2 totally different things at once. On the one hand, if you look at Visa and MasterCard, transaction volumes are holding steady. People are still out there swiping their cards. But if you listen to a company like Procter & Gamble, who makes stuff we use every day, they're seeing a clear, consistent slowdown. So it seems like we're still spending, but we're definitely getting a little nervous about it.
And this whole economic story is playing out very differently depending on where you are in the world. In Japan, they're actually talking about a reindustrialization, a new boom that's being powered by all this AI investment. But then you look at the US, and the outlook is way more hesitant, with economists actually lowering their expectations for GDP growth.
And for the US, the bottom line seems to be this. The good news is a full-blown recession isn't really expected for 2025. But the bad news? Any relief from those high interest rates probably isn't coming until 2026. So we're kind of in this economic holding pattern, just holding our breath.
So when you piece it all together, the crazy tech boom, the physical roadblocks, the trade chaos, the nervous consumer, you end up with a situation that can really only be described as a high-stakes standoff.
This is just a really unique, high-stakes moment we're living through. We've got this incredible momentum from the digital world that is now being forced to deal with a physical and political world that is suddenly and very aggressively pushing back.
And that really leaves us with the one big unanswered question. As these two massive forces keep grinding against each other, something's got to give, right? So what's it going to be? Will our incredible digital ambitions find a way to power through all these physical limits? Or will the hard realities of the world we live in force those ambitions to bend?